interest rates come down when economies are struggling. So if your plan was to crush the economy, I guess you're on point, and that's what we're facing right now. So the underlying current is not good. The trajectory is not in the right direction, and we have to pay attention to what's going on and in terms of how we lift the hood. Our government literally believes, or at least their narrative is that they've got this all handled. It's all part of their plan, but that just really shines a light on their incompetence. We could trash talk the government all day. Oh, speaking of trash talking our government, let's talk about how interest rates are down, CPI is down. According to Chrystia Freeland and our Prime Minister, their plan is working. I mean, how much better can it be? It's because their plan is working that interest rates are coming down and inflation is coming down. They've got this handled, except for they missed one point, and that is that interest rates come down when economies are struggling. So if your plan was to crush the economy, I guess you're on point. We have to look at this for what it is. And when we look at interest rates coming down as investors, we love it. Interest rates, great. We're not carrying as much load. We can make cash flow. But ultimately, we have to lift the hood under why are interest rates coming down. And by the way, JG, I don't know what they are today, but I looked at bond yields yesterday, 5-year bond yields yesterday on the 15th, I think it was, or the 16th, and 2.68. So
they have tumbled from like 2.92 in a couple weeks to like 2.68, which tells you, in case listeners don't know, this is an indication of where fixed rate mortgages are going. The 5-year fixed rate mortgages, this is an indication of where they're going. Already down by 0.3, 30 basis points. That's incredible, Patrick.
Well, and I think that again, as investors, we say, okay, great, we're going to get some relief on the interest rate side of it, but let's not miss the point of why and how come bond yields come down. And the bottom line is bond yields come down when the economy starts to get challenged. And that's what we're facing right now. So the underlying, tide, if you will, or the underlying current is not good. The trajectory is not in the right direction, and we have to pay attention to what's going on and in terms of how we lift the hood. Now, I just wanted to say that straight out. The sarcasm part of that is that our government literally believes, or at least their narrative is that they've got this all handled. It's all part of their plan, but that just really shines a light on their incompetence. So that's any government. We can look at that. Ultimately, for us as investors, interest rates are coming down. Good. Inflation is slowing down. Not that prices are coming down, although some prices are coming down, JG. You know something? Fuel's down. Rents in Vancouver are pulling back a little bit, and even in the Lower Mainland. So
I'm going to be doing a rental market update here. Unfortunately, I couldn't be at the REIN member meeting this month or next month because of other engagements, but I am going to be doing a rental market update. I'll release it on YouTube because definitely we've hit rents are sliding back for sure. And we are seeing a lot of investors making the wrong decision as it comes to rents. And I'll talk about that in the rental market update that I'll release probably this week, in fact.
And we've talked about it before, is that when we look at student housing, of course, now they've changed some of the allowances for who they're going to let in the country as students. Now they're not being able to put 10 students in a room, or there isn't 10 students to put in a room. So that's been cut in half, whatever the numbers are. So we're hearing more and more anecdotally about investors who had student housing who are now struggling because there isn't as many students to cram in their overpaid.
Patrick, I called that. How many months ago did I tell you that was going to happen? How many months ago did I tell you this was going to happen? I knew this was coming. And actually, I'm seeing in a couple clients at Visture, we're getting $900, $950 per room on some of their student rentals. And we're not huge into student rentals, but we do have a couple that we manage. And I've been telling our clients, listen, you're going to struggle. Like, you're going to have to reset your expectations. And the ones that are smart are readjusting their expectations. Some of them we're repurposing, putting them back on the long-term rental market, which I always think is a good strategy. And some people, though, and this is the mistake that clients are making as it relates to their rents, their rentals, student rentals, very similar, is they hang on to an old story, Patrick. You and I talked about it. They hang on to this old story that,
oh, I once got this, I once did that.
You have to adjust to the current market conditions. And if the current market conditions allow for that rent, great, you can get it. If they don't, there's no point in fighting for an old story. You're just wasting time. You need to adjust and pivot.
So if you like these episodes and you want to learn more about what's going on with real estate in Canada, investing in real estate, and understanding how to invest in real estate the right way, head on down to the descriptions below, follow those links.